some. He says we haven't made much progress outside in the core services ex shelter. So I think his words have not been, fully consistent in this regard, but he often says, I think the right thing, and people aren't listening. And, financial conditions have eased a lot. I think the Fed is going to need to do something about those financial conditions. Whether it can do it with words and dots and things like that at the next meeting is one possibility. But it might need to do a 50 basis point hike to really get the market's attention and put in place the economic conditions that really could start to bring down this inflation that remains very, very high.
Rick, your reaction, what do you think would happen to the markets if there was suddenly a 50 basis point hike at the next meeting to try and grab our attention?
The yield curve would dramatically invert even more because the Fed, most likely on the back side of this, is going to have gone too far. Listen, we have a lot of smart people on this panel, but I'd rather look at the market and take the assimilation and accommodation of current numbers. 7 in a row in terms of headline year-over-year drops in inflation sequentially. 4 in a row for year-over-year core. That is the concrete, tangible, can hold it in my hand, even though seasonal adjustments and a lot of issues may make the numbers slippery. Numbers have always been slippery. This is what traders have to work with, and they are working with it. If you look at the Dow futures high of the session today, the high of the session from an intraday basis was the highest that contract traded for all of 2023. And I'm sorry, if I'm going to make a bet on the back half or end of this year as to what position I want in the marketplace, I don't know that I would put all of my chips on economists and the soothsayers of the future. I think I'll go with the markets. They will continually update as information becomes available. And
Rick,
I'm sorry.
Can we talk about that sequential decline in inflation?
Else, there's no money left. People trade to make money.
Rick, can we talk about that sequential decline in inflation?
Yeah, Jason, make your point, and then we'll go to Steve.
Yeah, look, we had an inflation rate of 9%. It's come down to 6.4. 6.4 is incredibly high. No one ever thought that 9% was going to last. No one, the Fed doesn't look at the 12-month moving average.
You know what? The
They're
Fed
looking at what's going on in the month, and what's going on in the month has picked up.
They did. They were wrong. They said it would last. They were wrong.
No one thought inflation was going to stay at 9%.
Now. You know what? They said that inflation would be super sticky, and they were wrong. And they said it would be transient.
No one predicted 9% inflation.
They're just wrong with respect to how long of a period of time. Listen, Jason, why would I put my money on you versus the market? Give me one good reason why I would do that.
If all I'm here to do is recite what the market thinks, it's not that useful. So I'm making my input. Maybe it's useful. Maybe it's not.
Oh, it is useful.
You, Rick, can decide to ignore it. But I just tell you, I think 6% inflation is a lot higher than most of us thought it would be at this point in time.
It's super
come down
high,
from 9.
but it's not 9.1. And in 6 months, it'll be lower than that. It
probably will be lower than 6.4. I agree with that, too. It just won't be 2. I don't think it's going to be 2 6 months from now.
I never said it would be 2%.
Jason and Rick.
What?
Guys,
go ahead. Say that, Steve. What was your point?
Rick? Rick and Jason are both missing the point here, is that there is very little difference right now between the Fed outlook and the market outlook. This is the big story. I'm a little confused how Jason can say that the Fed needs to tighten financial conditions when, in fact, financial conditions have tightened dramatically. This thing is working in a really, I want to say, good way, in the sense that if you can call up that Fed rate outlook, I'm looking at it right now, you have the market peaking at 522. The market actually, the Fed funds futures for the August contract is above the Fed for year end, which is a good place to look. We're at 495. The Fed is at 5 1/8. So, Rick, I'm not sure that there's, the economists are kind of saying the same thing. Economists actually
I'm talking
are in some
about
cases,
the price
a little
of the
more hawkish.
S&P 500, the price of the NASDAQ, the price of the Dow, and interest rates. That's what I'm talking about.
I don't do stocks. I think
obviously, what economists see at this point, what some of the investors see at this point are two different things, and we watch that play out in the markets every day. You can even watch it between the equities futures and what you're seeing with Treasury prices, too.
I just think